Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the move on gold was totally unexpected. Yes, we were bullish on the chart of gold because of the global market sentiment, but making a high of 1988 was totally unexpected. To be honest, when I saw 1988 in the morning today, I was totally shocked. Okay, so if you look at the news right now, then we can see global equities fall, gold surges as banking worries linger. Okay. Gold shines through the chaos as investors seek safe haven. Gold futures surged more than 2% Friday to cap the yellow metal's biggest weekly gain in 3 years as the wave of banking crisis shook markets and raised fears that more bad banking news could come over the weekend. If you have been listening to me, then hopefully you made profit because I have been repeatedly requesting each and every one of you that you should follow the trend of the market sentiment is bullish. In fact, yesterday also we spotted a symmetrical triangle pattern, and I told you guys that in this present market scenario there's a high chance that market will be going for a breakout. Yes, I was also not expecting this kind of a big breakout, but yes, we were bullish on the chart of gold. If you look at the forex sentiment meter, we can see 86% retail traders are still on the sell side, and the average sell position is 1894. Right now gold is standing at 1988, more than 1000 pips. So my dear friend, if you're also holding your sell position, then please try to look for some exit strategy, because this is not the market where you should be looking for some selling opportunity. See, as I always say, whenever fundamentals dominate the market, technicals fail. In fact, couple of days ago, we discussed about the monthly chart, where we saw that in the month of March, gold usually shows good price rejection from above. Gold usually goes down. But right now, the whole market sentiment has changed. This is the power of fundamentals. Whenever fundamentals dominate the market, everything fails. So in this type of market condition, following the trend of the market is the only strategy. So my dear friend, if you're still holding your sell position, please do not gamble with your hard-earned money. Try to look for an exit. Okay, because the market sentiment is bullish and will remain bullish at least for the next couple of days, at least till 22nd March, next FOMC. So first of all, let's have a look at the chart of DXY then. Okay, so if you look at the chart of DXY, then DXY closed at 103.86, and DXY's condition is also not very positive right now. In fact, when I made the video yesterday, okay, DXY was standing somewhere around here. I told you guys that in this market condition, high chance of market breaking the support and going down. DXY broke the support. On Monday or Tuesday, DXY should go for the support of 103.50. After hitting the level of 103.50, market may try to take support, but if the same situation continues, then DXY will break 103.50 as well. And if you look at the bond chart, okay, bond chart is very bearish, very much selling pressure. Okay, too much selling pressure on the chart of bond right now. You can see bond chart is continuously forming lower highs. So if bond tries to recover also, things will not be much positive, and there's a high chance that it will be going down again. By Monday or Tuesday, it should test the support of 3.329, this particular level here. Okay. And if this support, okay, if market comes to this support, then obviously we will see good buying on the chart of gold. We will see further upside on the chart of gold. After all, market is bullish. So my dear friend, this is the 1 hour chart of gold in front of us, and if you have any ongoing buy position on the chart right now on gold, then be on the trade. No need to exit. You are just doing fine. Okay, if you have any buy position, no need to exit. Be on the trade. If you have any sell position, then yes, you should try to look for some exit strategy, because this is not the ideal scenario. In this market condition, there's a high chance that market will be going further. Okay, and if you're looking for fresh entry, then buy at dip. Okay, buy at dip is the only trading strategy you should be following right now. Means whenever market will be coming down for some retracement, you should go for a buy position. Right now you can see the market is standing at the top, so market is already overbought. Okay, so as a result, in this type of condition, okay, taking a buy position is highly risky, because eventually when market will be coming down to for retracement, okay, then you may end up in trouble. So as a result, it's better to wait for some time. Okay. If you look at the higher time frame, let's say if you look at the daily time frame of gold, then you can see the next resistance is around 1900 level. The next resistance is around 1900 level, but in this situation, in this scenario, there's a high chance that market will break 1900 as well. Yes, after hitting 1900 level, you may see some temporary correction. Market may reverse by 40-50 pips, but again market should break 1900 level as well. And the biggest resistance or the strongest resistance on the chart of gold is at the top, that is 2070, that market made during the war of Russia and Ukraine, which is still going on. Okay, but when market became very bullish, okay, this was the high made by the market. So we have two resistances right now, 1900 and 2070. In this condition, 1900 should not work. Day traders, you may find some selling opportunity, quick selling opportunity, 40-50 pips, but eventually market should break 1900 level, and 2070 is the only logical resistance on the chart of gold right now. Okay, so on Monday, if you see the market is going up again after the market opening, listen to me carefully. If you see market going up again after the market opening, if you want to take a buy position also, go for a small buy, because market is overbought right now. As I already said, market is heavily overbought right now. Taking a buy position can be very, very risky, because eventually market will have to come down. No market in the world go up in a straight line or goes down in a straight line. Market always move in a zigzag pattern. So here also you can see the market is right now standing at the top. So when market will be coming down, that will be the best time to go for a buy position. So in this case, the level is around 1964. Okay, in this level, in this market condition, if market comes to 1964 level, okay, that will be the perfect entry for us. And because you can see we have Fibonacci retracement here, as well as the previous high, okay, to act as support. So 1964 is the only logical retracement level in front of us right now. So market opening will be very, very important. So after market opening, if market comes down, wait for 1964. If possible, if you're not experienced enough, do not go for sell position. Selling in this market can be highly risky. Okay, so after the market opening, if market comes down, go for a buy around 1964. If market breaks 1988 level and starts flying again, you can go for a buy, but take a small lot size, because market is highly overbought. Okay, this is the only strategy that you can follow right now. And if you are looking for some safe trading opportunity in this market condition, then wait for retracement. That is the only strategy that you should be following right now. Buy at dip. Whenever a market condition is like this, whenever a market is extremely bullish, buy at dip, means buy at retracement, is the best trading strategy. If a market is in downtrend, sell on rise or sell at resistance is the best trading strategy. You see, so we have very limited opportunities on the chart of gold right now, whether you're a day trader or swing trader. So please be careful. As I always say, do not gamble with your hard-earned money. Bye bye, take care.